first thing first, I want to say this. Residents are like babies. They go based off of a pattern. If you're lenient in the beginning, they're going to keep doing the same things.
How old are you?
I'm 21 now. So I started my journey in multifamily real estate when I was 17 years old. Since a kid, I knew I wanted to do real estate. I always knew I wanted to be an entrepreneur.
Okay.
And whenever I heard what most rich people do was always invest in real estate or have this high amount of income, and then they'll put that into real estate. COVID happened. I looked at that as an opportunity to learn what I truly wanted to learn. I had this vision at 17 that was going to take me 4 years to become a property manager. I became a regional within a year in the business. I thought it was going to take me 4 years to get a deal. I got my first deal within 2 years.
How is keeping your promises to investors important?
It's important because your reputation matters in this business. I mean, you can't really have multiple times to fuck up in this business, especially when you're accepting a large amount of money from these credit investors. My current goal on my mirror is 500 units a year. It's 5,010. If I have everybody paying me $1,000 average rent, that's $5 million a month, $60 million a year. If I sell it for a 6% cap rate, that's $1 billion. The reason why I have this big goal is because I want to have a jet in my 30s. But to simplify it, I just need 500 units a year.
Yeah.
So it's all about how big can you dream, but how can you simplify that?
Hi guys, welcome back to my channel. Welcome back to Escape Velocity Podcast. In this podcast, we are bringing people, we're bringing ideas, we're bringing opportunities for you to grow and learn how to be financially independent. And today we have a wonderful person in our midst, Kylan. He's going to be talking to us about asset management. So I've met this guy from a lot of the networking events that I've been going to in Dallas, Texas, and he's just everywhere. He's just one of those guys that really want to, suck up everything and learn and run with it. And, like within a very short time, this guy is like around 18, was 19. How old are you?
I'm 21 now.
You're 21.
Yes, sir.
And he's 21 years old and he's running with the vision like, I wish I got into apartment investing at 21, right? So he's doing great. He's doing amazing. And I saw his passion. I was like, let me bring him to the show so he can talk to you guys how asset management is helping to grow his wealth and how he's planning on his financial independence. Kylan, welcome to Escape Velocity.
Thank you for having me. I'm really appreciative for this opportunity. I appreciate the introduction, but I'll go ahead and give a quick story. So I started my journey in multifamily real estate when I was 17 years old by driving to every single complex in HEB. And then once when I graduated high school, I became a porter, picking up the trash, cleaning the pool, even picking up dog shit. And then I moved all the way up to regional property manager by the time I was 19. And I used that experience from the operational point of view to help me become a general partner on my first deal, which was back in February of this year, 195 units, Miranda on Central and Miranda on Pipeline.
That's amazing. So what kind of inspired your journey into apartment? What is your background? What is the push?
Of course. So since a kid, I knew I wanted to do real estate, but I always kept using my age as an excuse.
What brought about the thoughts?
What brought up the thought?
Yeah.
Well, I always knew I wanted to be an entrepreneur.
Okay.
And whenever I heard what most rich people do was always invest in real estate, or they'll have a company or have this high amount of income, and then they'll put that into real estate. So I knew the advantages from real estate, but I just never really took the time to study how to buy a deal and et cetera, et cetera. But when COVID happened, I looked at that as an opportunity to learn what I truly want to learn, because I mean, yes, I still did my schoolwork, but I already knew I didn't want to go to college. So during that time of COVID, that's when I started just driving properties, studying Grant Cardone every day. And then I knew from property management that could be my leverage piece to become an owner, because I don't come from capital.
Yeah.
I don't come from a family with a big track record from real estate. So I wanted to use the operational knowledge to help these other general partners that needed help with these deals.
No, that's great. In apartment investing, you have to bring something to the table.
Got to.
I like that you said you don't come from capital, right? But you are looking for other compensatory things that you can bring to the table, and to you that is asset management.
100%.
Yeah, so that's great. That's great. So during COVID, you were how many years old then?
I was 17 when I started my journey in multifamily.
So 17, and now you're 21, and now
Correct.
you have how many assets under management now?
So it's a 2-property portfolio, 195 units.
That's the Avanti that you guys just closed.
Correct, but we just correct. So it was Avanti on Central when we took over, and then we just renamed it to Miranda about, say, last month.
Nice. So Miranda. Okay, that's great. So walk me through you said you first started like doing some picking up trash, and walk me through, that was your first job?
Correct.
Okay.
So the reasoning why I started off as a porter, I'm a huge fan on understanding both sides of a coin. So I did the porter to understand the landscaping appeal. How can I have the best landscaping? What time frames do we normally have the most trash? You can't get mad at your maintenance for trash to be on a property if you don't understand the time frames when trash is normally on a property. Then I moved up to leasing consultant. Before leasing consultant, I'm sorry. I did make ready to understand how to properly do unit turns. And then when I moved up to leasing consultant, how can I increase the pipeline? How can I close the most leads? One thing I used to do as a lease consultant that allowed me to get 20 leases per month was a rule of thumb. If you came in the office, hey, our trash valet is $15. If you go to our comps, they're $20. If you go to a newer build, it can go up to $35. Create that trust in the beginning, because prospects don't care about the quality of the unit. And that's where most investors mess up at, is they think that they have to renovate the property to the best way possible. They care about the people in the office, the trust from the people in the office. So I'll say, hey, go to these properties. I want you to go look at the other comps. And then whenever I give that follow-up call, it's an easy close, because they're like, hey, you're right about these additional add-on fees. Or sometimes other properties don't even tell them about the add-on fees till they move in. So now that I acquired that trust, it allows me to close the lead. And then I moved up to assistant manager to understand the financial age receivables. Most owners don't give assistant managers their trophy. They always care about the property manager. It's the assistant manager that's doing these daily reports. It's the assistant manager that's dealing with the resident issues. So I really want to master that position. And then I moved up. I was trying to become a property manager to understand, how to operate the team, how to do invoices, how to retain relationships. But whenever I had an interview as a property manager, I got the job. Within that next Monday, I went to the corporate office. There's like, this kid knows a lot. Let's just make him the regional. So I was a regional property manager before I was a property manager.
Amazing. And this all came about from your drive to really master an aspect of apartment investing.
Correct.
So
and I'm sorry to cut you off. Back to the drive. I had this vision at 17 that was going to take me 4 years to become a property manager. I became a regional within a year in the business. I thought it was going to take me 4 years to get a deal. I got my first deal within 2 years. And the only reason why I was able to speed up that process is because I always try to 10x my goals, have big goals, and take small steps. Most people have small goals and take a lot of steps, and they never really truly achieve anything.
Yeah.
But the bigger that you aim for and you break it down to detail, like my current goal on my mirror is 500 units a year. It's 5,010. If I have everybody paying me $1,000 average rent, that's $5 million a month, $60 million a year. If I sell it for a 6% cap rate, that's $1 billion. The reason why I have this big goal is because I want to have a jet in my 30s. But to simplify it, I just need 500 units a year.
Yeah.
So it's all about how big can you dream, but how can you simplify that dream?
I like that. And you and I, we have Grant Cardone as our mentor, so he talks about 10x, how to 10x everything. So that's good. One thing I love about you is that you are a very practical person. You like to put into practice everything that you're learning, and that shows in just your accelerated move in just the apartment investing space. When I started 2021, That was my first Brad Sumrock's conference. That was the same vision I had. To have like a certain number of passive income that I need to have at a particular time. And this year, my goal was to become a GP. And just like you, we closed on our first. I closed on my first deal, 228 units in Tombo.
Major.
Yes, sir. Yes, sir. So, bro, I know you kind of delved deep into asset management already, but I want to come back a little bit to it. What is asset management? So I used to tell my viewers that an apartment that is underwritten right, that is bought right with the right debts and equity, and then an apartment that is closed right, managed right. I feel like a lot of people just focus on finding deals and closing deals, right? But the major work is on the asset management, because this is where you are going to, 10x your NOI or 10x the value of your property. It's in the asset management, right? Obviously, you have to buy right? So what is asset management?
The quickest way to explain asset management is how you can keep your promises to your investors. You can tell them about the 2x equity multiple. You can tell them about a 7% cash on cash, but none of this is achievable if you don't have a good asset manager that's overseeing the reports, overseeing the financials, and walking the units. So without a good asset manager, none of this performa goals that they're telling you is going to happen. They're going to underachieve on that deal. And that's where, and I don't want to say too much because, of course, there's more experience that I need to learn. But I think most people, they get tricked on social media from most investors showing the cars, the nice houses, and they normally come from just capital raising. And that's not to talk bad. Capital raising is still a very essential piece on a deal, but they don't understand how to operate the deal. And if you don't know how to operate the deal, it's going to go to shit. And then you're going to have somebody like me that's going to pick it up for a 30 to 40% discount.
We like discounted properties, right?
Especially right now.
So once you can manage right, you can pick up, great properties in the market. But I want to go back to that definition. You said asset management is what? How you keep your promises
to your investors.
How is keeping your promises to investors important?
It's important because your reputation matters in this business. I mean, you can't really have multiple times to fuck up in this business, especially when you're accepting a large amount of money from these credit investors. So back to when I said you have to keep your promises to your investors. Whenever you underwrite a deal, anybody can underwrite a deal. I can simply get an OM and a T12 and a rent roll and underwrite it based on what the broker is telling me. But the more that you understand asset management, the more that you'll understand the numbers. And the numbers are what makes the deal. But at the same time, you have to know how to really explain how you're projecting these numbers. The only way to project these numbers of return of investments is if you understand that asset class, you understand that year built vintage, and you just know how to operate deals in that current market. But it all goes back down to you have to know how to operate the deal to really lead by example with the numbers that you're presenting to your investors.
So assuming you come across a deal, maybe you have a deal under contract and you're working the deal. What are some of the areas that you're looking at for, improvement? Because, in apartment investing, NOI is kind of the most important number. What are some of the things that you are looking at? Just, hey, I have like a 200 unit building in Dallas, Texas. Do you have like a checklist of things that you're looking at to add value to that property?
I'll say this beginning. This is what I did whenever I was 17. And of course, we're at a stage where we can't just take tours for every single property. But touring properties is so valuable because you learn insight that the broker is not going to tell you. And I'll give you a quick rundown. Let's say that we're taking a tour on a property. First thing I always do is call the property. Before even going inside, I'll be like, hey, I'm in the area. I'm looking to take a tour. Do you have anything available? And shut up. I want to see what information are they going to ask me for. Are they going to ask for my phone number, my name, my preferred move-in? What's my price range? Just have information about me. Because if they're not asking me anything, then I know that I'm losing a shit ton of prospects. So before I say, oh, let's increase the marketing, we could be losing double the amount of money and expenses from marketing if they're not even asking me simple information. Then whenever I take the tour, I asked them typical things, and this is just quick examples. Like, is the ceiling height the same in each floor level? Because if the first floor has 15 foot and then the second and third floor has 10 foot, you can charge more money for the first floor. Or is there vinyl throughout the unit for each floor level? If it's only for the first floor, which most properties have, then you could charge more for that. Or if you just need to have the story of the deal. But what really helps me is at the end of the tour, I'll always ask residents, hey, like, how do you like it here? I just took a tour. I'm thinking about moving here. How do you like this property? Oh, I love it. The rent is good. How long have you been here? 3 years? I know they haven't been moved up to market for each year. They're saying the rent is great. Over 3 years, your rent should kind of not be great. So then I'll ask them like, hey, is there any typical work orders? Oh, my AC's been fucked up. Now I know to account for a bigger CapEx budget for HVACs. Maybe the seller is telling me that they already replaced all of them. But I'm hearing residents from real life time saying that they put in a work order request for an AC for maybe 6 months or 5 months. So I'll try to see how's the actual work order flow, because you can easily complete a work order. Like literally, some maintenance, depending on your team, they'll probably just turn in a work order. So it's up to the property manager job to call each work order that's complete and ask for a survey. These are just simple shit. But other than that, what I'm really trying to do is just create a story that the broker's not going to advertise me, because they're telling me a dream. They're not telling me the nightmares. So when I get real life data from residents, it helps me know where I should tweak my numbers at. But back to your original question, it depends solely on the comps. So if my next door neighbor is similar year built, similar C-class property for say, similar unit size, similar amenities, and they have black appliances, and most of the other properties have white appliances, it might not make sense to do stainless steel. So I don't want to go to a deal and say, oh, let's just fucking make the units all premium upgrades with stainless steel appliances, and the comps can't even approve of that. So again, it goes back to being on foot. And that's why I love asset managers that's on foot, because you can't tell me that we can raise the rents by $500 if you can't prove it based upon the current residents in place. They're not up to market, because first you got to bring them up to market before you raise the rents truly. And then if the comps can even upstand this type of incremental value that you feel like the property can have. But I mean, there's different ways to increase the NOI. You can do the Wi-Fi cable bundle package, which most people are doing that. Normally it's from $89 to $100. And just by being in the market, you're aware of these numbers, which can help you on the back end with your underwriting. Let's say our trash valet is $15. I know we can raise it up to $35. And then hookup connections. This is a simple one. Most owners, they like to do the washer and dryers for $50 per month. Let's say that 30% of the properties of the property is only hookup connections. Then we could charge that as a premium unit instead of bringing the actual appliance. I've charged $25 to $35 to at a property for just hookup connections. So there's different ways you can definitely add value. But I feel like before you try to just do the value pieces, that takes a lot of time in terms of phases, and that's a big value increment. First, walk the property, see where the residents are currently at, because if you can't convince the current residents, you're not going to be able to change the new prospects. And then also, what are the comps in the area? What do they have? Do they have a lot of classic premium to premium upgrade units? You just need to know that. So the more that you understand the market and the common 1 to 5 mile radius, it can help you with your numbers in terms of doing these value add incremental things.
That's good. It's a lot of game. It's a lot of game. You're giving us a lot of game. So I want to kind of stay in this phase of improving the value, because that's what like every asset manager wants to do. I know you talked about the internet. You talked about the washer and dryer. What other ways? I know there is parking reserve, parking spots, and what other ways can you like generate more cash for the apartment?
Well, like you said, carports. If you don't want to do the carports, you can simply just paint numbers and do reserved parking spots.
Yeah.
Wi-Fi and cable, trash valet, or just your current fees.
Yeah.
Maybe your admin fee is $70. Most admin fees goes up to $150 or $175. Or the application fee, if it's $35, most application fees goes up to $65.
Yeah.
So you can just change the regular common fees that you still have to pay for the property.
Yeah.
Or you can add more fees like holding fee. Most properties, whenever you apply for a unit, and if it's available as soon as possible, you only have a 2-week margin to move into that unit. But let's say that we charge a holding fee, which is $100, to extend it an extra 2 weeks. Some people, especially right now, I'm noticing a lot of pre-leases. A lot of people are moving in advance because they know that they don't really have that leverage piece against their current property. So they want to really be in the market ahead of time so that they don't rush into another property. So maybe a holding fee is essential to these people.
I've never heard that before.
There's so many different add-ons. And I strongly want to encourage the audience to understand this. There's a million ways to increase the NOI. But before you do that, again, it goes back to your current residents. You want to see what portion can they truly pay for additional add-on fees? Because if they're not paying these add-on fees, it's going to be hard to have future prospects to pay these add-on fees. So let's say that it was an all bills paid, just like how Miranda is, and we transitioned it to have the residents pay for the utilities. Before we start adding trash valet, or right now we're working with different vendors for the Wi-Fi package. But before we add these, we want to see, okay, if we're charging back 20% of utilities back to these residents, are they paying on time? Are we having a lot of late fees? If we're having more late fees than usual, it might not be the best time to add all of these incremental value add things. So again, it's back to phases. One thing I love about multifamily is a long-term game. Yeah. It's not a get rich quick, it's a get rich for sure.
For sure.
You don't have to add a million value add things the first year round. And then on top of that, before you can even add these value add things, it has to be whenever they're close to renewing. So it's still a phase essentially. Yeah. But of course, there's the list can go on and on. Like we're gonna outrun on this podcast with value adds. But before you do it, you have to truly understand what can your current residents pay. Right. Because the last thing you want to do is try to bring a new product to new prospects when you're not leased at a good percentage. So you want to make sure that you're operating efficiently before you start taking these big risks.
Bro, man, there's so much game here. There's so much game. I like that. And so one of the things that, Amazon will say that we are a customer-centric company, right? How important is it to really, really know your tenant base? Like you need like an understanding of who they are, what they want. How important is that?
It's very, very, very important, and most management companies don't even fill in the information whenever somebody moves in. So if you're a current owner, ask for demographic reports if to see if they truly been putting it in the system. But it helps out a lot because you want to have a mix with different races. You never want it to just be primarily a certain race, especially in terms of long term. Let's say that if it's 60% black people and most of the black people move out, then you're gonna have some trouble with that property to keep it operated at a high level. Yeah. Or just income. I worked at an A class before, and 60% of the people made $100K or more. What does that tell me? This location is going to grow. When it came to that demographic report, to be more specific, majority of those people came from either real estate or a professional background. And normally us as investors, we want to stay where we know money is being made. Yeah. So it goes back to the location and long term because it's a long term game. Normally you're holding these deals for 5 to 10 years. Yeah. So whenever you really look at the demographic report in terms of a long term approach, it can help you know when the market is going to go up, the market is going to go down, or if you should change your marketing around. Let's say that we're starting to see we're having more Hispanics. Yeah. Maybe we need to have more marketing with Spanish translation instead of English translation whenever we hand out papers in the public area.
Yeah.
You just have to know your tenant base because it can help you know where the money is going to be made or where the money is going to be lost at. And I would be a fool to tell you that real estate does not have risk behind it. You want to understand the risk more than the upside. So whenever you look at the demographic report as an example from a long-term approach, it can help you really evaluate the risk early as possible. Because you don't want to find out about it late. And it goes back to the ripple effect. Like right now, we're in a ripple effect. We knew that this was going to happen in the market, but it took 2 years to happen. So the quicker that you're able to analyze something before it happens, the better that you're going to be as an owner.
Yeah. That's amazing. That's amazing. So let me think. So let's talk about marketing for a little bit. One of the things I love about buying in a primary market like Dallas, Texas, or DFW in general, is that you are gonna have like inflow of individuals who want to rent with you, right? Because people want to live closer to the city, right? So what are some of the marketing lessons that you've learned so far in asset management? Because you guys are the people that drive the traffic from the internet, from different places to the apartments. So what are some of the marketing strategies that you have used in the past that really works out?
First thing first, reviews. People forget to ask for reviews. Reviews matter because before somebody moves in, they're going to look at those reviews. So the best time to ask for a review is the day of move-in because they're already excited. Whenever they're renewing, or like one thing that I always tell people, just do like a simple raffle draft. Say, hey, if you leave a review, a 5-star review, we'll enter your unit because you can't ask for it in a way of, like, hey, a bargain, but like, hey, we'll put your unit in a raffle draft. And whoever wins gets $100 gift card. What can you lose from $100 gift card? So reviews matters. When it comes to marketing, and I have a lot of prospects that wants to move in as soon as possible, that could be a red flag. And most people, they like to just move in whoever, but seriously do the research on the back end. Yeah. Call the precinct courthouse. Most people don't know this. If you get evicted, you still have like a month to sometimes 2 months to still move in somewhere, and it's not going to show in your background because the previous property has to do the final count statement and then send it, ding your credit. Yeah. So if you understand that from a marketing perspective of okay, most of our people are moving in as soon as possible. Yeah, there's something fishy in this area with the current prospects. So you just have to know the trends. Yeah. And for example, with that story that I just told you about just calling the precinct courthouse and then asking them, hey, has this person got evicted? You could potentially save yourself from losing even more money. Because if they got evicted from that place, 9 times out of 10, they might get evicted from your place and then do appeal, file for bankrupt. So it helps you on the front end if you do the research in the beginning. But from a marketing perspective, I would just say the reviews and staying local with the stores that surround you. Tell them about community events. Possibly start a community event with them. There's a snow cone place that was like a minute away from Miranda, and they helped us with our first community event. That could lead to referrals. So just by marketing with the people around you, it's not hard. And then don't forget about every social media: Facebook, Instagram, TikTok, Craigslist. The list goes on and on. Just keep repeatedly posting on these social media platforms, but also keep it based on the current residents. Yes, you want to promote about the specials, but you still want to market about the community events or things that you're doing for the community, because then that helps you bring the story for new prospects, because the only thing they care about is the community and trust. So if you're showing a lot of videos, a lot of pictures from the things that you're doing with the current residents, it can help you a lot with the marketing. Because after they look at the reviews, they're going to look at your website, and it all goes together.
Yeah. So one of the things the investors want to know is, when am I getting my cash? When am I getting my cash on my distributions, or how are you guys doing? One of the ways investors kind of gauge how an apartment is doing is the money they are getting either on quarterly basis or on monthly basis. And that kind of builds the confidence that you guys are adequately executing your business plans, So, but down from that distribution is actually rent collection, right? So if you're not collecting rent, investors are not getting their distribution, right? So I want to ask you a question. Assuming you have like a tenant who missed a payment, right? What does that trickle like something? What do you guys do? What is the eviction process? What does it look like?
So first thing first, I want to say this. Residents are like babies.
Mm-hmm.
They go based off of a pattern. So if you're lenient in the beginning, they're going to keep doing the same things. So always be strict on the 15th is the latest, unless they do a promise to pay. And I'll still be particular who I accept the promise to pay to. I'll go and look at their ledger and see how many times they've been late, see how many times we had to go through this process. If it's their first time, then it's okay. If it's their third time over maybe a 2-year lease term frame, right?
Yeah.
Then it's okay. But if it's 3 times and they've only moved in this year, then no, I'm not going to keep doing promise to pays. And then you have to create scarcity. Whenever it comes to evictions, people normally try to file eviction whenever they owe the base rent, the 1 month of the base rent. Even if they owe a penny, still do a notice to vacate because it creates scarcity. They're getting a notice to vacate for a penny. What are they going to do next month? Pay their rent in full. You want to create that from the beginning, because if you don't, if you're chill about it in the beginning and then you put in a notice to vacate and say, hey, you have to pay this, they're going to ignore it because they know that you're not going to do nothing further than that. So whenever you create that scarcity, I'll give the quickest example. Whenever I was assistant manager, the delinquency was at $110K. Within 2 months, it dropped down to like $30K. And the only reason why is because I gave a notice to vacate out to everybody. And it's about how you approach the situation. 2 things from that. If I knock at your door and I say, hey, you owe rent, I'm not going to scream at you and say you need to pay today. All I say is simply, hey, this is a reminder of your balance. That's it. The only time I start saying when can they pay is the second conversation, because they're already aware that I gave them a courtesy warning. But if you go in there and being hot, they're going to be hot back. And it goes back to the second thing. Residents just like to hear themselves talking. So if you try to give them a debate, it's never going to end in your favor. So you just have to let them say what they want to say. But if you come in with that general approach, then they understand that you're on their side instead of being against them, because they know that they owe the money. They signed a lease contract for it. But the way how you approach the situation is what determines if they're going to renew or if they're going to skip and not pay your rent.
I feel like you went to a psychology class. You went to tenant psychology class.
It's just experience. Experience. And back to Grant Cardone, I used to watch videos from 12 p.m. to 12 a.m. the next day. And in one video, he was like, hey, you can watch all my videos, but eventually you have to be on site, because that's when you learn true experience in real estate. And it's just by being in the field.
No, that's good. That's good. I'm happy. Like I said, you're a very practical person, right? So walk me through. This is the first of the month and a tenant misses their payment, right? At what point in time do you go to remind them? Say the same habit repeats next month, or maybe they didn't pay. At what point in time do you go to the courts, to get like eviction notice and all that? And what is the process of eviction look like?
So by the 3rd,
by the 3rd,
the third is when I send. It's not a notice to vacate, but it's just more of a balanced reminder.
Okay.
On the 4th is when I actually initiate the notice to vacate.
Okay.
Depending on your property, it could be 30 days, or if you're lucky, the properties I love the most is when you can do a 3-day notice to vacate. So I'll give them the notice to vacate, tell them that it's just a reminder of the rent, and then follow up every day. That's where most people mess up at is, let's say a tenant says, "Oh, I'll pay you next week." You need to still follow up. Just because they say that, they're just holding off, and then have it in writing.
Yeah.
So making calls, sending out emails, knocking on the door. You don't have to knock on the door every day, but you can send like a courtesy email,
Okay.
or give a phone call, and then based on their history, if they have a good history, I'll have them sign a payment plan, promise to pay.
Okay.
And then I'll hold off. I'll have their file ready. I'll have the copy of the notice to vacate, the lease contract, the application, everything ready. But I'm not going to file the eviction on them until last if they don't pay on the day that they say.
Okay.
Even if it's the next day, you're still going through the eviction process, and then I might be lenient and still drop it if you pay the rent plus the eviction cost. But if it's for somebody that's not communicating with us back and forth, then after that day that I said, which is the 3-day, then I start the eviction process. Right now, it's a little bit lengthy. In 2021, you could probably get a court case in like a week to 2 weeks. Now it's like 2 weeks to 4 weeks. So they still have time. And I'm still following up with them. Because again, it's how you approach the situation.
Right.
It's not, nope, I'm evicting you, don't talk to me. It's, hey, unfortunately, I hate that I did this, but I had to file.
Yeah.
You know, legally it's black and white. I had to. But hey, I'm still giving you a chance. Just pay the rent plus the eviction court costs. You're good. But if you don't communicate and you just leave them on their own, then that's what might make them want to skip and move out. Because again, it's not on their record yet. So they can easily apply somewhere else and they would not know. So if you're communicating with them as a friend, essentially,
right,
it helps the process. And it goes back to what I said. Some residents just want to hear their self-talk.
Yeah.
You just let them talk. Be their friend. Be their support. Be their pal. Because at the end of the day, you still need your rent money.
Right.
So it's just how you approach the situation.
Right.
And whenever I start the actual filing, it just depends on their history on their account.
That's good. So one of the ways to avoid all the back end problems is to actually kind of filter them on the front end. What are some of the things you are looking at when you want to accept a tenant into a community, to make sure that maybe the finances are correct, has a reliable job, and all those kind of stuff? So what are the things that you look at?
I'll give you the perfect example.
Yeah.
So first thing first, fair housing, you have to accept everybody. The only way how you could decline the application is if they naturally fail because of their background check, proof of income doesn't match what the 2.5 times the rent or 3 times the rent, or if they just simply lie to you. The way to tell if they're lying is to really, really, really look at their pay stubs, their bank statements, because depending on your staff, they might just approve whoever, because they go based on the initial screening from, let's say you use one site and you do a screening and it comes back approved. You still need to look at their proof of income. You still need to do a rental history because there might be a scam behind it. Perfect example. This lady on her bank statements, it said that she had about $13,000 per month. But when I really, really, really looked through the bank statements, I noticed majority of that money was just credits and transfers from account to account. So let's say you have $500 and you send it to this account, you send it back to this account. Your second account looks like you have $1,000 now in terms of deposits or credits. So she's truly not receiving that amount of money per month. Those are the small things to look for. And that's where most people mess up at is when they see it proof through the system, they just scan everything else quick because the only thing that they care about is that $100 that they're getting for the bonus.
Yeah.
So they're not looking at the small details as an owner would.
Yeah.
So whenever you create these standard operating procedures with your management company and really be active. And it goes back to asset management. Really, truly be active with the management company. We're in a good spot with Burlington Capital. Majority of their portfolio consists of me and my partner's deals. So we have more leverage when it comes to conversations with the management company. So based on the relationship that you have with the management company, still let them do their job, but create some SOPs to follow through the things that they might not really be paying attention to because they just care about the bonus. Oh, I just got an application.
Yeah.
Let me hurry up and move them in so I can get this $100. They don't get it until they move in. So they might be rushing through the application process. So whenever you look at the small details, instead of just what the system says of approve, it can help you out in the long term. Because let's say that lady moved in, she truly doesn't have any income. So she could have been delinquent. But I could have saved myself time from that if I actually looked through her file before just giving official approval.
That's amazing, bro. That's amazing. So I have a question around, asset management companies, before I ask this question real quick, do you have any certification in property management?
I love property management. Whenever I was a porter, it was one time when I cleaned 2 pools in like an hour. Was hungry. It was hot. Felt like I was finna pass out. And what I said to myself is, I love this. I'm appreciative that I'm in the space. When I was a porter, picking up trash, picking up dog poop, I was appreciative that I was in the industry and I was able to learn the experience because now this experience has me on this podcast. So property management, I love it. But when it comes to hiring people, you really want to understand their mindset, not just their certifications and the licenses that they have and experience that they have, because they might just be looking at it as a 9-to-5 versus me. I look at it as, how can I increase the bottom line? How can I have the best resident satisfaction? And how can I help whoever my ownership group is achieve their performer goals? It's just your mindset. You have to have the proper mindset in this business.
I definitely love your mindset. I feel like your attitude speaks for itself. Like you came in with your whole heart and you are ready to succeed, and that's really great. And you are now working your way up the food chain. So that's good. So back to the question I wanted to ask. What are some of the things that I'm an apartment investor, right? I've heard you give like a lot of game in this podcast already. Something that I call a subject matter expert, right, in asset management. I want to ask you a quick question. What should I be looking at if I want to hire a property manager? What are some of the track record I should be checking out for? Kind of some KPIs that I should be looking out for to hire a very successful property manager?
Well, you can always, I would start with referrals from current GPs that's recommending out this management company, but be aware of how many properties they have in this management company. Because like I said, you can have more leverage when you have more of your properties in that management company, because then they'll spend time with your properties more than the other ones.
Yeah.
And that's another valid, the second reason behind that is, if it's a big management company and you're the smallest owner to them, they might not be paying as much as attention to your property. So it might make sense to hire a smaller management company that your property is majority of their portfolio, because now they're really going to be serious about your properties. See if they're managing similar year built, similar vintage, just like the comps. See what vendors that they recommend, and then talk to those vendors to see how they are as a company. Let's say that they're working with ABC Plumbing.
Yeah.
And you call ABC Plumbing. You're like, hey, do you like this management company? This management company hasn't paid invoices in 4 months. Then you know that that's a red flag.
Yeah.
So do your research with the referrals, their current vendors in place. Take tours. Go to similar properties that's under that management company and do what I said. Just call them up. If they're not asking for your information, that's from, it could either be 2 things. Either that lease consultant is super bad, or she just wasn't properly taught how to talk to prospects, what systems in place do we have as a management company? I've worked for a lot of management companies, and one thing I can strongly say is that a lot of management companies don't have educational resources for their staff. So you want to see if they're truly educating their employees, because if not, then their employees are not going to grow with the current market.
Yeah.
And if you don't grow with the current time being, it's going to be hard to get a lease when your comp is doing what needs to be done. Let's say it's a special, and you don't know the best specials to do right now. It's just simple things.
Yeah.
But it goes back to the management company. What systems do they have in place? What educational resources do they have in place? How strong are their referrals and recommendations?
So for property managers out there, do you guys have like a group or kind of association that trains property managers? How do somebody get education?
There's different websites, or sometimes, depending on how big the corporate is, they'll probably make their own resources. Like when I was a regional at Wellington, I made a lot of reports. I actually, what's funny is my first week there, after corporate told me they wanted me to be regional, they had me redo the handbook. So it truly depends on how big the management company is. But there's millions of different websites, different events that they'll go to.
That's wonderful. Wow. I feel like we need to move over to the other sections, but I have one more question in the actually two in the asset management space before we move over to financial independence, and then your person, how you grow as a person. So number one is CapEx, right? And number two is dealing with local governments, right? So how do you manage CapEx? I'm going to bundle the question together so you touch all of them. How do you handle CapEx, and then how do you deal with local government rules and laws and all that kind of stuff?
Of course. So when it comes to CapEx, I have Brandon Martinez. He helps with the CapEx. And Ken Waters, he helps with the CapEx as well. So I'm still learning in that stage.
Okay.
But what I can say based off of what I know is pulling a lot of bids. And when it comes to bids, it's just not, hey, can you give me a quote of this? It's pure manipulation. Like, hey, the management company, they already know who they want. I want to have you. Like you have to create, like, you're the person I need, right, so that they can get you the best bid. And then whenever they give you a better bid and you get one from another person, hey, this other guy's telling me I can do this. Is there anything else I can save money on? Like, create a pure manipulation with it, but it gives you the best bids. Right. It truly gives you the best bids. And then another piece is just see what programs from the government does your property qualify for based on the year built, based on the location, based on the market.
Yeah.
And see if you can get potential rebates from that.
Okay.
But what I can say based on what I've learned from CapEx is you just have to truly oversee the vendors that you have in place, because if they don't see eyes, they're going to miss out on spots that shouldn't be missed out. For example, we had to change out all of the aluminum. We changed the aluminum wiring. We did aluminum remediation because it was required from the lender.
Yeah.
Let's say that I wasn't walking those units and taking pictures and having them open it back up in a random building, then maybe it could have been a fire.
Yeah.
So based on what I've known so far, it's just you have to truly oversee whoever you have in terms of contracts that's doing the CapEx for you at the property. And when it comes to bids, try to create an urgency, but add a little bit of manipulation in there.
Like I said, I feel like we're back to a psychology class or something. So, but yeah, it's a lot of information to digest, and I really like that, you are super passionate. One thing I usually tell people is that I can't teach you passion. Yeah, I cannot teach you passion. You understand? So when you see a person that is passionate, you understand. There's something we call key motivation index, right? So when you see, like we're going to a conference, right? And bro, like since last year, I've been seeing you everywhere. I've been seeing you every conference. I feel like, man, me and this guy, and this is key motivation index. This is how you know somebody is motivated, right? In this space, So that's really great about you. But I want to ask you a question about financial independence. We're moving to financial independence right now. You've said some things that even me myself are motivated. I am inspired just sitting down listening to you, how you are 10xing your plans, 10xing your goals, but even at those 10x, you are making it practical. You understand? So, quick question. What does financial independence mean to you?
Time. I can't say money. It's time.
Hmm.
It doesn't matter how much money you make. If you're not getting time back, it's not financial freedom. That's why I love multifamily, because of scales of economies.
Yeah.
I have a management company. It's Friday. I have somebody inside of the office right now while we're having this talk at our podcast.
Mm-hmm.
So, however you can get back the most time in your life is so precious. Even if you're making, let's say your bills is $2K and you're bringing in $3K, but you have so much time during the day, you're going to feel way more happier versus having $100K and barely having time to be with your family, barely having time to do personal things because you're so tied to the business to make that money.
Yeah.
So I think financial freedom is just truly having time back, because time is something that's valuable, because we only get one life.
Yeah. Redeeming the time. Yeah, that's great. So with that definition, how are you practically do you have a plan for your financial independence? I mean, you are 21 years old right now. Would you see yourself at 30? Would you see yourself at 40? Do you have a plan for financial independence, and what is that plan, and how are you executing it?
Well, back to the goal, 500 units a year, 5,010, $1,000 average rent, $60 million a year. If I sell it for a 6% cap rate, it's $1 billion. So that's my main goal, to get 500 units so I can have that amount of passive income. But aside from that,
500 units at what? General partner, limited partner?
As a GP.
As a GP.
Okay. The other goal that I have is to become a deal sponsor by my third general partner deal, hopefully going full cycle in the first two. That's another goal of mine. But back to the financial goal is to truly have time back. With the amount of money that I'm making right now, it's not a lot, but it's enough to pay my bills. And that makes me happy. Because I'm able to, if I don't want to take my son to daycare, I can spend the whole week with him if I wanted to. That's what I care about the most. The money I know is going to accumulate over time with more units that I acquire in my portfolio. But as long as I have time that I can actively use day to day, I'm happy. I don't have to make $1 million to be happy. I just need to be able to have enough time to see my son every day.
It's very funny that you are talking about this, because just yesterday I was telling my wife that, hey, what most people want in life is it's not to be on the Forbes 100 list. I don't want to be there. I mean, if God permits me, I'll be there, right? But that's not really what my drive is. My drive is to live life on my own terms. It might mean that I'm making maybe $1 million a year from my apartments, investing and all those kind of stuff. But I just want to live life on my own terms. I want to go to France and learn how to speak French. I don't want to worry about money. I don't want to be like, oh, I'm going to put in my request for PTO. I'm going to be out for this type. I want to remove all those constraints and be able to live life on my own terms, right?
100%.
Like, along the way, private jet might come in. That's good. That's like an elevation to the game, right? But that's not really my drive. My drive is to be able to redeem my time, right? If I really want to go to work today, I want to go to work, right? So I like that you said that, redeeming the time and having your time back.
And when you said the new experiences, like I actually just heard this podcast last night at 1 a.m. But he was basically saying, like, it doesn't matter how much money you make. You just have to create new experiences and try new first-time things. Because with our day-to-day, we do so much that it seems like the time is going by fast. But if you have new experiences or do something for the first time, essentially the time feels much more slower.
Yeah.
So back to the timepiece, I want to enjoy it to try to do new things. Go hiking. I've never went hiking. Go camping. I've never went camping.
Yeah.
Just try new things to make it feel like it's longer. And it goes back to this year. I just closed the deal in February. It's like my 4th podcast. I'm talking on an event in 2 weeks. I'm doing a lot of things. So it feels like this year is super long because I've had new experiences for the first time.
I like that. You know, I went to Dubai with my wife, right? And we had a good time. We spent a lot of money there for 2 weeks. We spent a lot of money there, but I'm telling you that was in 2022, I believe. Just sitting down and just reflecting on that, I will tell you that's a money-wise spent, you know, because the quality of the experience we had, right? I just go back and look at the pictures. All of a sudden, I'm happy again. All of a sudden, it seems like the experiences are new to me again. So I like that you said, try to experience something new every year, you know, because, man, before you know it, your year is going to go by. But do you know that 2022, that Dubai experience was a marker for that year?
And I was just going to say that.
Yeah.
Before you went to that trip, you was thinking about that trip, right?
Oh, yeah.
So it made your day slower because you had something to look forward to. If you didn't have nothing to look forward to, your day would have went by fast.
Yeah.
I've been looking forward to this podcast.
Yeah.
I've been looking forward to the event I'm about to speak to.
Yeah.
So it makes my week feel slower because
Right.
I have something to look forward to.
Right. And that's the magic of financial independence, you know. I went to Chick-fil-A. So a few days ago, I was studying for a certification exam. So I took a day off to go to library to study. But before then, you know, I went to go eat, and I saw this man. He's very old in age, right? It feels like for a split second, I was drawn into his world. Like I was experiencing his world, you know. And I was like, wow, this man truly have to do this thing to really put food on the table for his family. I mean, he has gray hairs and all that, you know. I was like, I wonder what happened during his vibrant years, right? So, and this is one of the reasons why I'm passionate bringing people like you to this type of podcast, because at 21, bro, you are doing a lot. You are passionate. You are aggressively trailing the blaze, you know, because I'm sure a lot of, maybe your dad didn't do this for you.
Nobody in my family.
You are the first generation builder, wealth generation builder in your family.
Yes, sir.
And you want to transfer that out, right? Somebody has to, just like Ed Milet will say, you know, tell yourself you are the one. You are the one to stop the generational poverty in your family. You are the one to put a stop and then create a new trend in your family. So I like that. So what advice, bro? Because I feel like your life is kind of one of those that has been marked with focus at a very young age. As a teenager, you already knew you were consuming quality content from great individual. What advice are you going to give to like teenagers out there or 21 years old out there about just staying put and pursuing their goals and financial independence and all those kind of stuff?
Stay uncomfortable. That's the only thing I can say. As a teen, you're comfortable. You've never paid bills, essentially. You got food on the table. You can go hang out with your friends. And you still have a village to support you. So you're comfortable. You don't want to take that first step of initiative by yourself. So as long as you're staying uncomfortable, and it goes back to anybody at any age. If you're comfortable, you're not growing. You gotta start having some fear in your life. You gotta start having some risk in your life. But that's one thing that I'm gonna be strong on teaching my son. I mean, of course he's gonna be financially okay. But I still want to challenge him in some moments to make decisions for himself. And I think the earlier that we teach this generation on how to make those decisions by themselves, how to truly be uncomfortable. Like, I moved out when I was 19, then I had my son. So I automatically had to be a provider, right? There's some months where I didn't know how I was going to pay my rent. But what I did was stay steady. Let God do the tell. You're always going to have storms in your life. You're always going to have different seasons in your life. But as long as you're staying steady, staying humble, and being uncomfortable, the world is yours.
I like that. So as we round up this conversation, one thing I know in life is that life has vicissitudes. There are ups and downs, more like the stock market, volatility, ups and down, right? How do you stay motivated? You just mentioned
read my goals every day. You don't even have to answer the question. I read my goals every day.
Like
I'll tell everybody my goals. Out loud? Yeah, it's on my bathroom mirror. Okay. I write everything on my mirror. Before we closed that deal, I wrote on my mirror 200 units 2022. We was able to get under contract for 195 units in 2023. Whenever we closed that deal, instead of me celebrating, I said, I'm thinking too small. If I have a bigger vision, there's a higher chance that I'm going to be able to obtain it. Yeah. Because your mind is super powerful. So I read my goals every day, and it's Kylan multi-keys, get closer to God, 500 units a year, 5,010. Yeah. Become a deal sponsor by my third general partner deal. Become a better man, human, and dad. Motivate everybody, and get to 200 pounds. I'm trying to get big. I've been working out a little bit, so I'm trying to get big.
I have to go write my goals today. Huh? I have to go write my goals today. I have to read it out loud every day.
Every day.
Every day.
Sometimes I say it most times a day. Sometimes I rap it. Sometimes I sing it. I just like to retain it. And this is one thing I can say, back to the generation. As long as you see something, you don't even have to say it every day, but as long as you visually see it, it will naturally happen. Let's say that you have a gun and you want to do harm. It naturally might happen because you already have that attention in your head. Let's say you want to make money. It's naturally going to happen because you have that attention in your head. As long as you visually see something, as long as you say it out loud and believe it. Yeah. That's all. That's what keeps me motivated. And having big goals, 10x. If it's small, then I'm not going to put in the effort. Yeah. If it's big, I'm going to try to simplify it. If I say I want to be a billionaire in my 30s, you're like, bro, he's crazy. But if I tell you it's 500 units a year, like, okay, yeah, it's achievable.
Achievable. That's great. So as we round up, what are some of the books that you've read you would like to recommend to some of our viewers? Maybe some masterminds that you were part of, or maybe I just want to know, what is your environment like? You said that you read out your vision, every year. That's an environment you are creating for yourself, right? So what are the people you are surrounding that is influencing your ecosystem to keep yourself on the go?
Book-wise, I know everybody said this book, but Rich Dad, Poor Dad. That's what truly set the ground piece in me. Like, I knew I wanted to do real estate, but after I read that book, it made me understand what I didn't really understand. Okay. Like, I just thought that you had to be rich to do what you do, but it's just mindset. That book really teaches you about mindset, and the people that you're around can help you with the dreams that you want. Nobody's dream cannot be possible if you don't have support behind it. Yes. When it comes to people, real estate events, I love real estate events. I was nervous to talk to a broker in the beginning, but I love going to events because the energy that you feel. Yes. The energy that you feel at a real estate event is something that you can't explain because it's all positive. Yeah. They want to see you succeed, and you're around successors. But my main mentor, which is Gabriel Kraft. Yeah. I'm around him I'm around him every day. And when I say he motivates me, he makes me feel like I'm not doing nothing. Like, I say I'm busy, but not busy as him. He's up at like 6 a.m, doesn't go to sleep till like 10 or 11. And he's working during that whole time. Don't get me wrong. I'm working during the whole day, but like, every minute of the day, he's productive. He doesn't have no sitting time at all. Yeah. And at his age, it truly motivates me because I'm young. So I feel like if he could do it, then there's no reason why I should not be able to do that, or times 2 or times 10.
That's wonderful. So, guys, I know that, Kylan has really, really inspired all of you today in this podcast. And I like having him around. There's a lot of game, right? A lot of practice, practical steps that you have to take. He reads out his vision out every day. I'm going back from this podcast with something practical. I mean, I've read a lot of books and they've suggested that, but I've never really practiced it, right? But now I see somebody who is practicing that and I can see the result in his life. And so I want to start practicing that. I want to start emulating that. And you've heard his plans, his escape velocity plan, how he's trying to build wealth as a first generation wealth builder in your family. You really have to think differently. You have to set the trend. You are the trailblazer. There's a lot of firsts, and you are the first wealth builder in your family. So thank you all for listening to this podcast today. I hope you tune in for our next section. But before we go, we want to say thank you for being here. We know that there's going to be a lot of partnership with us in the future. So thank you for being here, and we appreciate you.
Of course. Thank you for having me. And if anybody want to reach out to me, my name is Kylan Multi-Keys on all social media platforms. KYLAN MULTIKEYS. And if you do decide to make a business, make sure that your business name means something impactful.
Yes.
Kylan's my first name. Multi is short for multifamily, and Keys is short for keys for success.
Yes.
The more keys that you have in this business, the more income that you're gonna have. So
I like that.
I love keys.
The more doors, the better. The more doors, the better.
The more doors, the better.
Yeah. Thank you very much.
Thank you for having me.
All right.